Hello students, Assalamu alaikum. Today we are going to start our AS paper 22 of November 2023. So here is your paper. See, okay. See, October, November 2023, paper 22. Okay, first question. P Limited sells electronic goods online. The director provided the following information: balances. Okay, these are the ending balances. 31st July 2023, opening balance 1st August 2022. Okay. Now, bank account extract is also given, payments and receipts. Achha, this information, all goods are dispatched to customers immediately on receipt of payment. Inventory 31st July 2023 included damaged items that had cost 3,600. One half of these items will be scrapped and have no value. The remaining item will be sold for $900 after repairing cost of 420. So it means here the NRV of these goods, okay, the cost is 3,600, but NRV is 900 minus 420. Getting my point clear? This is NRV. So that would be 900 minus 420, 480. This is NRV. Okay. Debentures were issued on 1st April. So we have to calculate interest on debenture. That would be 8%. Okay. But it was not issued on, not issued on 1st August 2020, but in April to April, May, June, July, August. April, May, June, July, August. 5 months. No, April, May, June, July. So it means we have to take 4 months interest on debentures. The charge for taxation was 10,700. Okay. Now, prepare the statement of profit and loss for the year ended 31st July 2023. Use the space provided to show your workings. Oh, cost of sales. You can calculate cost of sales here. Okay. So what we need to do first. Okay. First, we have to report opening inventory. Opening inventory is here 36,800. Uh-oh. See, cost of sales. Now, opening inventory. Inventory. Okay, this is how much? We'll write it over here. 36,800. Okay. Now purchases. I think we are not giving the amount of purchases over here. So what we do, we write, okay, payment to, we'll start with this. Payment to creditors, add trade receivable, trade payable ending, less trade payable opening, and we'll get the amount of purchases. Simple the formula is. Okay. Okay. So 122,050 is the payment to suppliers plus trade payable ending is 29,610 minus opening trade payables 25,250. So that would be the amount of purchases here. Okay. 122,050 plus 29,610 minus 25,250, 126,410. Okay. So payment to creditors less opening trade payables, add closing trade payables, and we'll get the amount of purchases. Okay. Then what is the other item in purchases? Okay. Closing inventory. Now for closing inventory, we have to be careful because from closing inventory, we have to take, okay, closing inventory is 43,190. Okay. $43,190 minus damaged goods 3,600 plus NRV of damaged good, that was how much we have calculated already. Yeah, 480. That's 480. So it would be 43,190 minus 3,600 plus 480, 40,070. Closing inventory 40,000. 40,070. Why haven't put it in a bracket? Because we have to deduct. Okay, now here we'll get the cost of sales. And how much it would be the cost of sales? See, 336,800 plus 117,690 minus 47. 114,420. 114,420. This is your cost of sales. Done? So this is what we have done today. Okay. Let's put a line below that. Okay. Now administrative expenses. Wow. What we have to do with administrative expenses? Okay. Let's see. Administrative expenses. We are given payables. Administrative expenses, we are given receivables. Okay. It means we have to use the formula of expenses. Administrative expenses paid 66,920. Okay. Okay. Payable at the start of the year 960. Okay. Okay. And administrative administrative as a payable at the start of the year is going to be subtracted from the total expenses. 66,920. Okay. 66,920 minus other payables at the start of the year. Administrative expense as other payable at the start of the year 960, it's going to be deducted. Minus 960. Okay. Then administrative expense receivables. At the start of the year 12820, it is going to be added, and this receivable at the end of the year is going to be deducted. Okay, 160. Plus 1,820 minus 160 is equal to how much? 66,920 minus 960 plus 1820 minus 160, 67,620. 67,620. This is administrative expense. Okay. This is accrued. This is prepaid. Okay. Now, accrued at the start of the year is going to be subtracted. There is no accrued at the end of the year. This should be added. Prepaid at the start of the year is added. Prepaid at the end of the year is subtracted. This is the formula of calculating the correct expense. Okay. Prepaid and accrued. If an expense is being paid with all accrued and prepaid at the start of the year and the end of the year, there is a special formula to calculate that. Okay. So all accrued at the start of the year is going to be deducted. Accrued at the end of the year is going to be added. Prepaid at the start of the year is going to be added. Prepaid at the end of the year is going to be subtracted. This is the formula on which I have calculated the administrative expense. Okay. Now, move to the last box, distribution cost. Okay. See how much distribution cost we have paid. 51,730. Okay. Distribution cost. Again, this is prepaid. So prepaid at the start of the year is not given. Prepaid at the end of the year is given. Okay. So what we have to do, we have to deduct. This is prepaid. Okay. Azan हो गई. So distribution cost 51730. 51730 minus prepaid at the end of the year, which is 1490. So that would be together. How much? 51730 minus 1490, 50,240. Got it? This is the distribution cost. Okay. Now we can start easily our income statement, profit and loss statement, or income statement. Okay. Revenue. Okay. Revenue total 284,200. This is our revenue. This is our revenue. Okay, 284,200 is our revenue. Okay, 284,200. Okay. Now, less cost of sales. Cost of sales we have already calculated here. 114,420. It should be in bracket. 114,420. Okay. And we'll get the gross profit. Okay. Okay. So we'll get here gross profit. How much? 282,400. 284. 200 minus 114 420 169780. Okay, 169780. 169780. This is our gross profit. Okay. Now we have to deduct the big expenses, administrative expenses and distribution expenses. We have already calculated administrative 67,620 and distribution 5240. Okay. Now less administrative expenses. Okay. That was how much? 67,620. 67,620. Okay. And less distribution expense. That was how much? 5240. 5240. Okay. Done. And we'll get here profit from operations. Profit from operations. Okay. That is how much? 169,780 minus 67,620 minus 50,240. 51920. Profit from operation 51920. Okay, now we have to deduct finance cost. You know what is finance cost? We have to calculate, I told you earlier, we have to calculate this 8% debenture. Okay, so 8% interest on debentures. So debenture cost is 36,000, but debentures we have issued only 4 months ago. So we have to calculate the interest on debentures for 8 months. Okay, so that was 36,000. Okay, 36,000 multiplied by 8% multiplied by 4/12. So that would be 960. Okay. So after 51,920, minus 960, we have 50,960. 50,960 is left with us, which is our PBT, profit before tax. Profit before tax. Okay. Now, what we have to deduct here? Yes, income tax, taxation or something. We are already given here 10,700. You remember? This 10,700. So we have to deduct it over here. Taxation. Yes. Taxation. 10,000. 700 in the bracket. 10,700. And we'll get here what we required 40 minus 10,700, 40,260. 40,260. Yes, this is our profit for the year. Okay. We have done. And we got 15 marks, mashallah. Okay. Now, next, we are given additional information. Okay. Share capital on 1st August 2022 at the start of the financial year, $120,000. So the number of shares would be 120,000 divided by 0.5. Sorry, 0.5. So it means 240,000 number of shares available. Okay, 240,000 number of shares are available. Okay, share premium, retained earnings. Okay, now what we have to do, we have to complete this statement of changes in equity. 1st August, share capital is given, premium on share is given, retained earnings, which is already given here, and they have just copied. So we have to follow the steps. On 1st September, a bonus issue of shares were made of 1 ordinary share for every 6. So what we have to do, 240,000 number of shares divided by 6. It means we are issuing 40,000 shares multiplied by 0.5. We have issued 40,000 bonus shares at the rate of 0.5 to our existing shareholders. Okay. So here what we are going to write, bonus shares. Bonus shares. Okay. Share capital would be increased by 20,000, but we are not going to pay, or we are not going to receive anything. So we will settle through share premium, but share premium is only 19,000. So, and we have to settle how much? 20,000. So what we do, we will deduct 1,000 from retained earnings. Okay. This is it. Bonus shares. Okay. This is that. And it has no effect on the totals. Okay. There is no nothing to add in the totals. Are you getting my point clear? Because share premium is reduced by 19,000 and retained earnings is reduced by 1,000. Share capital is increased by 20,000. So it is balanced. Now, next, on 1st January 2023, a final dividend of 0.07 per share was paid on all shares in issue at 1st August 2020. At 1st August, we have 240,000 ordinary shares available, number of shares. So 240,000 multiplied by 0.07. It means 16,800 is our final dividend. So we'll write here dividend. Is 16,800. It is going to be reduced from retained earning. It means our totals are also going to be reduced by 16,800. Okay. Third point. That was second point, sorry. Third point was dividend right issue. Right issue means we are issuing 1 ordinary share for every 4 share held was made at a premium of 0.15 per share. Okay, this we are getting something. Okay. Okay. Now, right issue means we are selling shares. Okay. Now, means we are receiving money for that. C. Now we have share capital of 1,40,000 after bonus issue. 120 plus 20, 140. 1,40,000. Okay, divided by 0.5. It means we have 280,000 shares. And we are giving one right issue, for 4 shares. If a person is holding 4 shares already existing, we will sell him 1 more share. So 280,000 divided by 4 means we are issuing 70,000 more as right issue. That 70,000 multiplied by 0.5 means we are increased by 35,000 share capital, right issue. How much? 35,000. Got it? Okay. Now premium is 0.15. It means if we are selling 70,000 shares multiplied by 0.15, the premium is 10,500. The premium is 10,500. Okay. And of course, retain earning is not involved here, but our total increase is 45,500. 45,500. The last thing we have to add over here is profit for the year, which we have calculated in our 4260. 40,260 that could be added into retain earning. 40,260. Okay. Now what we have to do, we have to get the totals over here. Okay. $175,000. 175. Okay. Here we have only 10,500 now. Okay. Here we have to calculate. Yes. 23,560 minus 1,000 minus 16,800 plus 40,260. 46,200, 46,020. 46,020. Now get the totals from here. 162,560 minus 16,800 plus 45,500 plus 40,260. 231,520. 231,520. Okay. Oh, we are on 6 months. Okay. Anything else? Revenue reserves means retained earning, general reserves. Retained earnings and general reserve. Okay. Advise director whether or not they were correct to make a bonus issue of share rather than making a new share of issues. Justify your answer. It is of 7 marks question. I must tell you one thing, when we issue right share, we get the money. But when we issue bonus share, we don't get money. Bonus share is just, it's a favor to the existing shareholders. They can have more shares. And it might be possible that we could, due to bonus shares, we could decline the market value of the share in stock exchange because we are giving more shares freely, free of cost to the existing shareholder. In the right issue, we can get money and we get finance. Okay. So be careful about that. Okay. Simon formed a parcel delivery business on 1st July 2021. He purchased a delivery vehicle for $29,000 from his business bank account. So he started business on 1st July 2021. He decided to depreciate delivery vehicles on a monthly basis using the straight line method. He estimated that a delivery vehicle would have a useful working life of 4 years. It would have a residual value of 5,000. Okay. It's using straight line. On 1st November 2022, a new delivery vehicle was purchased at a cost of 44,000. Old daily vehicle was part exchange at a value of 16,800. The balance was settled by a bank loan, repayable over 2 years. Okay. We estimated the new delivery vehicle would have a useful working life of 5 years and would have a residual value of 8,000. Estimate two factors that causes the value of non-current assets to depreciate. First is wear and tear. Sorry, I forgot to wear my glasses. Wear and tear. Second, obsolescence. Okay. Prepare the following accounts for the year ending 30th June 2023 using the space provided to show your workings. Delivery vehicle for depreciation. And this is the working column. Okay. So we have to make two accounts, delivery vehicles at cost and delivery vehicles provision for depreciation, two accounts. Okay. Okay. So what we do on 2021. Okay. July 1. We bought machinery for his bank, motor vehicle for his bank account that was cost $29,000. Okay. $29,000. Okay. Now 2022 June 30 balance CD 29. Done. Now here starts the new year 2022 November. Sorry. 2022 July 1st balance BD 29,000. Okay. And okay. Now on 2022 November 1st, this machine was exchanged. This motor vehicle was exchanged with a new motor vehicle. So disposal account is used. We will send this to disposal account 29,000. Okay. And on the same day, 1st November 2022, November 1st, we bought a new machine. But we did not pay through because it's not paid directly through the bank, but in exchange. So we'll write here the trade-in allowance is, that was given to us was 16,800. Now the cost of new machine, that is 44,000, is not paid from the bank as 44,000. But it is 16,800 as settled as trade-in allowance on exchange, and the remaining is bank loan. So we cannot debit directly 44,000. We have to debit in two steps, 16,800 from disposal account as okay, and on the same day, bank loan, through bank loan, we get the balance 44,000. Total cost minus 16,800 trade-in allowance, 27,200 here as a bank loan. Okay. Again, we have to calculate the closing balance. That would be on 2023 June 30. Now the balance CD is 44,000. Okay. Get the total here. 29 plus 44, 73,000. Okay. So account is closed. Please, all my beloved students, whenever you are making an account in your paper, don't forget to write balance BD. Okay. That is on 2023 July 1st. Balance BD 44,000. Now the cost of new vehicle can be seen on RTL 44,000. Getting my point clear? Okay. Now for depreciation, you have to be careful. See, first year's depreciation of this machine, which was 29,000, that would be taken on 2022 30th June. 2022 June 30. 1 year depreciation. Okay. Okay. Income statement. How much? We can calculate. The cost of machine was 29,000. 29,000 minus scrap value 5,000. Okay. And the whole value is going to be divided with 4. The life was 4 years. So we'll get the depreciation per annum here. That would be how much? 29,000 minus 5,000 divided by 4, 6,000. Okay. So first year depreciation is here 6,000. And because we are selling it on November 1st, we will include the depreciation for 4 months. That is how much? Again, 2,000. Got it? November 1st, because we are selling it. Now, because we use month-to-month convention, which is fine. So here, but on the same date, we'll transfer it to disposal account, 8,000. Done. So here we have the totals. $8,000 and 8,000. Done. Okay. Again, the second depreciation would be calculated with the new machine. Okay. That would be calculated on 2023 June 30. And that was again income statement. How much? The cost of now new machine was new vehicle was bar machine in New vehicle was cost 44,000 minus 8,000. Its scrap value. Okay. Life in years. How much? 5. So the answer would be 44,000 minus 8,000 divided by 5. 7,200 depreciation per annum. Getting my point clear? But what happens? This new machine was bought on which date? November 1, 2022. And we are on June 30, 2022. It means how many months for this year? November, December, January, February, March, April, May, June, 8 months. So if we calculate 8 months depreciation, multiply by 8 divided by 12. So that would be how much? 7,200. 7,200 multiplied by 8 divided by 12. Okay. So that would be, that is 4,800, 12 months. Okay. And this 2,000, which was supposed to be, which was calculated on 1st November 2022 for the 4 months, that would be included in the year. Actually, I have written here just to make you understand. But this income, this amount of 2,000, this would be included in 2023. So 4,200 plus 2,000 means 6,800. But because that machine is sold, so the closing balance would be only 4,800 for the new machine. Okay, got it? 4,800. That 2,000 has been included in this 8,000 as disposal amount. I have written that here over there just to make you understand. Okay. Okay. Again, this is closed. And we have to write for balance BD. All my beloved students, please don't forget to write balance July 1st, balance BD. $4,800. Getting my point clear? Okay. This is the situation. Okay. Getting my point clear? So I have made a more comprehensive provision for depreciation account to make you understand. Okay, done. What next? Calculate the profit or loss on the disposal of the delivery vehicles sold on 1st November 2023. Oh my God. Oh भाई क्या करें इसका? Okay. See. Cost of old vehicle. You know what was the cost of old vehicle? That was $29,000. Okay, less provision for depreciation. That was 8,000. Okay, keep it in bracket. Okay. So how much? Book value is 21,000. Book value. ज्यादा बुक हो गया. Book value 21,000. Okay. Let's trade in allowance. Trade in allowance. Trade in allowance was how much? I forgot. 16,800. Yes. In the bracket, 16,800. Okay. So loss, obviously loss on exchange would be 4,001. अबे क्या होगा? 4,000. Why it is more appropriate to depreciate motor vehicles using the reducing balance method rather than straight line method? Actually, all my beloved students, please remember always, straight line method is used for those assets, those non-current assets which do not have efficiency as a controlling factor. Getting my point here? See, if you have one cupboard and you can put 100 clothes in that cupboard, after 10 years, that cupboard will contain again 100 clothes. Are you getting my point? But that cupboard will be depreciated because of wear and tear, and it will look old, but it will keep 100 clothes even after 10 years. But suppose you buy a new car, in the beginning years, the car will be very efficient. But after 10 years of usage, that same car will not give you the same efficiency which it was giving when it was new. Okay. So efficiency is a very, very important controlling factor in non-current assets like motor vehicles, machineries, manufacturing plants. They are very efficient, but their efficiency is decreased. As far as cupboard or furniture is concerned, there is no efficiency as a controlling factor. So when efficiency is not a controlling factor in an asset, we use a straight line method. And when efficiency is a controlling factor, we use diminishing balance method. Getting my point clear? Okay. So we have done 2 questions today. Inshallah, question number 3 and 4. Inshallah, we'll continue in our next video. So take care. Allah Hafiz.